Hello guys, so welcome to the channel. So today we are going to be talking about popular market structures and what we are supposed to actually expect when we get into real charts, okay? Because most of the times when we get into forex trading and we start learning, sometimes we are introduced to different charts, okay? Probably the charts are simply just drawn, okay? Like the different patterns are just drawn for us, and when we get into the chart itself to start trading, it becomes complex for us to be able to identify these structures by ourselves. Okay, so I'm going to try to make it very simple for us to be able to understand some of these popular chart patterns and what we should expect. Okay, so the first on the list I'm going to be going for us to analyze is the inverted head and shoulder pattern. All right, so if you don't know what the inverted head and shoulder pattern, if you just type it up on Google, it's a pattern that looks as such. Okay, the inverse head and shoulder pattern. Okay, and sometimes while you're trading, these patterns are very strong. You equally have patterns like we have the double top patterns. Okay, we have this double bottom pattern as such. Okay, and we equally have the double top pattern. So you equally have the triangular pattern. Okay, so when it's drawn like this, it seems nice, it seems quite smooth, but you realize when you get into the actual chart, it's not the way it looks per se. So the main essence of this video is to make you to be able to identify these popular patterns as quick as possible whenever you open any forex trading chart or any other chart you open, be it stock trading or crypto trading. It's very important for us to know this. So this is a GBP You might, if it's your first time actually seeing a chart like this, it might seem a little bit complex, like which structure is available here per se. But to make it simple for you, sometimes if I'm to just get a simple structure as such from here, from this position going down, breaking here to the head. Okay, I started from the shoulder and now I'm going back to around the neckline, and we're back here toward another shoulder. So when I get this, I understand markets definitely has the ability to pull back to this similar zone here. Okay, so it's very important for us to note that even if we were to start drawing it from this from this position, you can see as such. So if I'm to shift this structure that is just being drawn now here to the left, for instance, for us to see that per se, if I'm to shift it as such, per se, you realize that this forms exactly that similar structure which we previously saw as such. Okay, this is simply the inverted head and shoulder pattern. So when you see like this, your eyes must be sharp to pick them. Your eyes must definitely be sharp to pick them and understand that, okay, this is definitely it. So if you find the chart at this kind of zone, definitely you should be anticipating for the markets to pull up to this zone, okay, because of this popular chart pattern. Okay, this pattern, if I'm to explain what in real market terms what this actually means, is this is actually a liquidity sweep. Okay, market was the sellers were actually pushing downwards, and a lot of liquidation took place because most of the buyers were actually at this zone, so they were taken out, and then market actually started going the right direction which intended to move, and this is just to pull back for us to start going. That's why you can see this zone 1, 2, and this is the third one still on that same zone. Okay, this is the head and this is the shoulder. That's how it's being explained. Okay, next one I want us to be able to look at is the is the triangular pattern. So this triangular pattern will have the ascending triangle and we equally have the descending triangle. This was on the weekly time frame, which this was quite was spotted. So if you look at this particular chart, sometimes it could seem like what's really taking place here as such. Most of the times, if I should get us back to this triangular pattern, the way it looks like, when you have a triangle pointing downwards, if you can draw it and it's pointing downwards, it simply means when it breaks the trend or when it breaks either of these lines, okay, it starts going down drastically. If it breaks the downer side, that definitely it indicates a very strong bearish momentum. Likewise, if it actually breaks the upper side, it actually indicates a very strong bullish momentum. Okay, so how do you identify this then? If we come to this is GBP AUD, probably if I get to the 4-hour time frame to make it much more clear for us as to what's taking place here. If you look at this clearly like that, if I were to draw it from here, you can see that the market has actually been ranging just within this triangle, and the moment it broke the triangle, you can see that it's showing us that strong bearish momentum. Okay, so For me personally, when trading, I actually see all these chart patterns as something that helps me to be able to get market direction, not entry. It gives me a lot of insight as to where the market is going to. In the subsequent videos, I'm going to be sharing with us a strategy, several strategies, and several methodologies of entry that should be used to actually enter the markets. Let's say after seeing a triangular pattern like this, what do I do? When it breaks it, do I just enter, or what do I wait for? So in the subsequent video, I'm going to be explaining, breaking down these different type of things for us to be able to see. All right. Notwithstanding the other patterns which we saw, probably it's a trend line. Definitely is a simple methodology here. We actually find that this was a low here. We equally have a high. Okay, this is a higher low. Previous and a new higher high is formed. We'll have a higher low, another higher high. Okay, here we simply have there's a retest here. Structures are broken but not maintained. It breaks the structure. This is a proof of a typical uptrend. Okay, consecutive higher highs are being broken. If you want to denote an uptrend in a way, you can equally use a trend line. If you try to use a trend line, make sure the trend line touches at least 2 to 3 higher lows consecutively. If you're in an uptrend, and in a downtrend, you must make sure the reverse actually takes place so you can see the trend clearly. But sometimes, in some cases, you might not be able to draw a trend line, but yet we are still in an uptrend. Okay, so the easiest way for you to denote if we are in an uptrend or not is if consecutive higher highs are being broken. Okay, once higher highs are broken consecutively, then we are in an uptrend. So you have to take note of that. So we saw of double bottoms, we call it saw of double tops. So one of the patterns that you're going to be finding regularly in the market is actually the the double bottoms and double tops. Very effective in most charts you're going to be analyzing. So this is an example of a double bottom, even though we have about 4 of them here. But before this chart came to this zone, assuming that we were still at this level, the market came to this zone once, twice. It's a double bottom already. That's forming already. Double bottom simply means a high level of a high level of support, and the double top is a high level of what, resistance. So that's what it simply means. All right. So without making these videos so long, these are some of the patterns that you see. Sometimes it might not be all that smooth the way we want them to look like. Okay. All you just simply need to identify is, does it look like what those lines probably in the learning phase, what they look like. So it's very important for us to identify some of these structures while we move along. Okay, especially the inverted head and shoulder pattern. I realize most of the times people find it a little bit difficult to be able to identify this strong inverted head and shoulder pattern, which we actually just observed just now. If you cannot be able to enter the charts and just quickly spot that this is an inverted head and shoulder pattern, then it becomes difficult for you, because you might be thinking from here we are going to start moving downwards, but yet we start moving upwards. Okay, this is a high confluence level for us to be entering our trades. Okay, and also mind you, this on the 15-minute time frame. You always need to actually look at what's going on the higher time frame when it comes to the 15-minute time frame, and you equally find a chart pattern like this that actually is a very bullish pattern. Then you're actually on a good footing to get into your trades. So with that being said, I look forward to seeing you guys in the next video. So don't forget to like, share, and subscribe. So see you in the next video.